Episode 15 of the Sunday Analysis. Today I'm going to be dropping some knowledge bombs from my 7 years of experience, giving you a part of my edge in the Forex markets trading euro dollar, and we're going to be diving into the drop that we've seen in the past 2 weeks. So let's get into today's video. So as we can see here, we're on the daily chart. What have we seen previously? Obviously, we've had price coming into this mitigation here to the left, which is a sideways range, followed by an initiation to the downside. We run the swing high, opportunity for new intentions come into the market. We created that sideways range. We broke out, so we knew that we was in that initiation structure to the downside, and we're very clearly seeing aggression and speed to the downside as well. We haven't had any sort of deep pullbacks. This shows initiation structure in the market, and we expect that after a sideways range. So now it's just about what's price going to do next. We can see that we obviously created that 50% range, which I said that we might create around 50% of the range. That's very normal in an A to B price range to create a range in the middle. And now we're just seeing that continuation of that aggression. So now it's just a case of, is price going to start to slow down inside the ranges that we have here before price initiated? And we also have this range down here at the edge before price initiated to the upside. So I suspect the price is going to see a continuation. Now from here, this is the area where we could start to either pull back here and create a potential fractal high in the market, which is possible. We might also just run through and just continue with this momentum to the downside. That's very possible as well. Or we might start to create a larger range at this point here. Now it's because we're at low prices relative to this whole sideways range that we have here. That's why I'm starting to anticipate price starting to slow down here more towards the edge. And I know price needs to react out of the ranges that we have here at the edge as well. As I said last week, it's about trading with the momentum when you're seeing that initiation structure to the downside, and that's exactly what we've done this week. Let's go on to the 1 hour chart. So what can we see on the 1 hour chart? As I said, we'll create that range around 50%. This is 50% of that daily chart that we was just on. We created that sideways range here. We broke out to the downside. We created that new sideways range on the breakout as well. We reacted out of the equal highs, mitigated out the sideways range, initiation, mitigation, continuation. So that was really nice shorts that we had there on Wednesday for that continuation. And then we moved into today. We had a sideways range, initiation, pullback, mitigation, continuation to the downside there in New York. I did get involved in this high here in New York as well. Ended up taking a break even just before that dropped. It's just a part of trading, but we move on. So now we're on the 1 hour chart and we can very clearly see that we got that continuation to the downside. We're clearly seeing just that aggression and speed continuing to the downside now as well. And we've got a lot of room to the downside before price potentially takes out that low that we have down here, which is that daily swing low. If I just zoom out so you can see that now. So let's go more intraday now. Let's look at the 15-minute chart. So knowing the market phase, we're anticipating that price is just going to create new ranges and see continuation. So even though you might look at the chart in terms of trend and you might be looking at the chart like so, which again does make sense as well, we're seeing initiation, sideways range, initiation, and a new sideways range now. And we've just broken out the low of this sideways range that we have here. So this could either start to initiate to the downside, or we could start to just pull back into this range here towards the end of the day. Normally when we're in this higher time frame initiation phase, if we just go back and look at the past couple of weeks, normally London's going to be your better session. It's because we got a very clear direction to the downside. So like you see, pretty much every London session is going to give quite a large move overall. And New York typically, well, for the times that I trade, because I trade normally the end of New York, it's normally going to be a lot slower. We're normally going to see that fast move towards London session overall. So that's the better session to trade when we're in that higher time frame initiation phase. Now, when we go into range structure or trending structure, which is when price is contained sideways here between a high and a low, or when we're in that trending market, then New York becomes a better time to trade, because typically London will open up in the middle of the range overall or create the A to B leg that we see here. So typically you're going to get better opportunities for continuation in New York, because we normally come up into better locations in New York when we're in the range and when we're in that trending phase. But when we're in that initiation, London is always going to be the best opportunity to get involved in those great moves, because it gives out the biggest moves in the market and the most volatile moves. So if you can start to understand the market phase, you can really start to understand when you want to trade and when you don't want to trade. For me, I'm not going to change the times that I trade just because the market's in a different phase. I stick to my system and my way. But this is the opportunity where you can start to be a bit more fluid with the market and just gain some more understanding and perspective on when you want to be looking at the charts and when you don't. So for me, when it's a higher time frame initiation phase, I know I'm not going to get many opportunities during this phase with the way that I trade, because I trade trends and because I trade ranges. So when we don't see those in my session, which is only 1 hour, I have to sit out and just be more patient during these phases. So I mentally prepare myself for that. Now, there's a lot of traders in NJT that trade the initiation phases. I'm going to pop them on the screen right now so you can see how well they've done this week in the initiation phase. It's about trading what you understand and what you want in the market. With our strategy, you can trade any market conditions, whether it's ranges, trends, initiations, it doesn't matter. I specifically pick one because I'm better at trading them overall, but you'll find which one you trade best, and you might even trade all of them best using the concepts. So now let's just go on to the 1 minute chart. Just want to show you the trade that I took today. I'll also show you Chuck's trade that he took as well. So this was London session. We can very clearly see that price is contained in this sideways range here. If I just draw that on now. And we can see that when price is contained in that sideways range, we want to be looking again at the edges of the range. These are going to give you the best opportunities for those buy lows here. If you were looking to sell, this would be your best opportunities for those sell high locations in the market. Now, Chucks was looking to get involved in this as that continuation to the upside. We see that we have this whole sideways range here before price initiates the upside. We broke structure, that shows intention in the market. Now, when we pull back into this location, we can see that we got that mitigation and then that potential continuation phase of price. And we can see that price was creating liquidity here as well for that continuation. And obviously then we target that high if we see that continuation to the upside. So this was the buy that he got involved in here to play that as a continuation, left his stop open because if he didn't get into this trade, he would have been involved in the next trade. And look how identical these trades look here as well. They're literally the same trade at the same location, playing the same intention of higher prices. We can see between this low and this high, we had a lot slower pullback. And we can also see between this low and this high, again, a slower pullback. And the most important thing is that we're trading at good locations. These are the buy low locations and the framework that we use at NJT to stay out of the middle of the range, which again, if you was to try and trade the middle of the range, you're going to get caught in a lot of trades that don't run into any sort of profit. Now this trade again went on to run to, I think it was a 9.9R and Chuck's TP is a 10R. So again, he took a break even on that one, which was a shame. But it does happen in the market. It's not the end of the world. We then run this previous high that we had here and all the liquidity that we had stacked here to the left. So we run all this liquidity. We have a sideways range here. We look between the candles. We can see that this is a whole buy to sell. So when we look here in the right in the future, this is where we want to look for that reaction and then trade alongside that intention to the downside. If you guys have been watching our videos, you know exactly how to trade with that intention. Now this was my continuation trade here. We can see that we had this A to B, we broke structure here. I took this as this sideways range, initiation to the downside. I saw the manipulation coming into 3 o'clock. We saw that reaction. I took that trade there as the reaction. Price came up, took me for break even and ended up dropping to the downside. Now, you may think, well, why did you take that range there? What's significant about this sideways range? Now, when we have loads of ranges like we have here, we have multiple ranges in this move up. What I do is I go to the higher time frames and I look at the most significant point on the higher time frames or the most significant range on the higher time frames. So let me show you that now. So 5 minute. What can we see here on the 5 minute? Now we have 2 ranges here to pick from. So we have a range here between the candles followed by initiation to the downside, and we have a range here followed by initiation to the downside. Now, typically when we get ranges together like this, I want to pick the highest one because I want to sell as high as possible. So when we see that run of that high, that creates that new sideways range. I've caught the high of the range, and then we expect that initiation phase to the downside. So me and Chucks have both 2 different ways of trading, but we both trade at great locations. So we took the buy low here, and now if you think about this is a new sideways range, and add on the framework, this is that sell high I got involved in for that continuation to the downside. It's important to read the intention and trade with the intention to the downside, because as we see, price creates liquidity and creates moves for future intentions. So you see that Chuck's trade here created that liquidity that we had down here, all those equal lows, saw a move up into higher prices, run the high, gave an opportunity for a new intention, and then we see that new intention to the downside, and that's when price targets that liquidity there to the downside. Price targets liquidity following that bearish intention. We didn't target the liquidity when we were bullish because we were creating that for the future. So it's about understanding and reading every market move and understanding why it's being created and what it's being set up for. And this is what we teach you to do at NJT. We give you the concepts, but what's most important is that you're in the trade floors on our Discord channel. You're learning from these price movements every single day. And this is what we're doing. We're teaching you on a daily basis, reading live price, how to understand every single market move. Minute chart, like I said, we've just broken out of this sideways range that we had here to the left. So this is either going to become that initiation phase to the downside, which we can start to anticipate after price has created a sideways range. And this is just this price delivery range and initiation to the downside. If we get that pullback, we get that mitigation continuation, and that's our opportunity to get involved, which was exactly the same as this trade that we had here. Sideways range, initiation, we pull back up into that mitigation. That's our opportunity to get involved. And then we trade with that intention to the downside, which was what we were doing. And we just look for setups in that direction to play continuation to the downside. So like I said, next week, we might see this continue to the downside. This might even just continue towards the end of the day as well and just start to trickle down and start to move sideways overall towards the end of the day. But next week, we could start to see that continuation. When we do start to get into the edges down here, which represents this blue line, if I just zoom out, you can see that that's the swing low that we had there on the daily. When we start to see price moving into the edges here, this is where we could start to see some stronger reactions because we're reacting out of buy lows at the edge. Now, doesn't mean that price is going to turn around and start flying back up, but if it does, then we'll just trade alongside that intention. And like I said last week, we're just going to trade alongside the intention if nothing changes. Price didn't show us any bullish price delivery this week. All we got is bearish price delivery. We broke out of the sideways range. We saw continuation to the downside here, and then we just saw that bearish continuation for the rest of the week. So we had a bearish candle for the week, and I'll just show you that on the weekly now. So as we can see there on the weekly, look how we've closed here. We created that sideways range at 50%, which we can see the range between the candles, and then we moved into that initiation. So once we broke out of that previous weekly low that we had here, we knew that it was potentially that initiation phase of price, which then means you don't want to trade against that. You want to trade with that momentum to the downside. So next week's looking pretty interesting, and the phase of the market that we're in now is pretty interesting as well. We're moving with a lot of aggression and speed. So make sure you're trading alongside the intention and not trying to catch every low and high in the market. If you haven't seen our recent content video as well, this will definitely help you trade the sideways ranges and also to trade alongside the intention. So make sure you have a watch of that. That's a really great video. I'll put a link up on the screen now so you can go and watch that now. And I hope you all had a great week. Thank you for watching. If you want to find out more about how we trade these markets with precision, visit our website at notjustatrade.com. You can also find us on Instagram at notjustatrade. The next content video is going to be released next Wednesday, so look out for that, and we'll catch you guys on the next video.